All right, I'm gonna try and do this without coughing. Still pretty sick. I don't know what this thing is. Haven't been out of the house in a while. Lost my voice. It's coming back a little bit. Still a little scratchy, but been just coughing like crazy, sniffling, sneezing. Nuts. But this market is pretty exciting. From trough to peak here, it looks like 180 points inside of 3.5 days. That is a crazy run right there. Crazy run. Let's see where we're at in terms of overall. Yeah, we are right here. Pulled back a little bit from this point right here. But yeah, we have definitely broken this downward trend right here. And we have to pull back a little bit and then see if this uptrend is going to stick. Because right now we're just off to have this one leg here where we had like a three-legged downward trend here. So we need more than this one leg for an uptrend. Let's zoom out further. Yeah. I mean, I guess you can tack this uptrend onto here if it pulls up over this 4,600 mark in this one rally, but I don't think it's going to do that. I think there's going to be a pullback before we hit the 46 again. So they said this rally was triggered by the CPI data. I'm not so sure about that. I don't think it could have been triggered, but I think people were looking for something positive to get out of this slide. The CPI data was good, but it wasn't fantastic. If you look right here, I mean, if you look at the annual inflation rate, it has been coming down steadily. It had a hiccup right here for August and September, but still pretty far down. This is the number that they were reporting. It was 0.03 or something like that. And this got everybody excited. Not so sure about that. I mean, we did have some low ones here throughout in July 2022. We had some low ones, and we still hit an 8.5 annual rate. So I don't see that this is fantastic news. So I'm not sure that this rally is going to last. I like I like to look at the quarterly. We're still pretty high in terms of quarterly CPI, um, but we'll see. We'll see how it goes. I think Jerome Powell was looking at what I'm looking at, and he still wants to go with some higher rates. But yeah, in this market, you have to take some profits. I'm hoarding cash right now. Market's starting to turn a little bit on us. I'm hoarding cash right now, and I'm trying to close out of my covered calls, or no, my puts. I bought back my covered calls a couple days ago. I want to look at my spreads. I did a spreadsheet for my spreads. Tesla. So for Tesla, most of October I made $618 on my Tesla spreads. That's net. Um, these are my last two legs open, and they're trading at about $200 each. If I were to take those and buy them back and get out of the position, I would only get out of the position with a 38% profit in terms of taking profits. See, I'd only be making 235 instead of the 618. I don't want to do that. So these are still volatile enough where I can stay in them a little more. Let's see, Apple. Apple, just have this one open. I made about $300 for the month of October on these. Uh, let's see. It cost me $39 to get out of it, which would be an 86.9% profit. So I'd be taking profits instead of getting the 297, I'd take the 258, which is fine. I want to go ahead and get out of that one. Same with Amazon. I made about 500 with Amazon. It was a decent month for these spreads. If I get out of them, I'd be making an 86.8% profit. So I'm gonna go ahead and do that. I mean, these have been fantastic. I don't want to get slaughtered on them. So let's buy them back. I'm gonna go ahead and keep my long one out there just in case it can appreciate still for another month and a half, and I can if Apple tanks, I can cash that one in for a profit, or it'll expire worthless, which is factored into my is already factored into my profit margin. So let's go ahead and close this out. No, I don't want to do that. I'm not creating a rolling order. I am getting out of it completely. So let's do this. And then when it declines a little further, when Apple starts to decline, I could roll out this my long put and then sell a put against it when it pulls back. So create closing order. There we go. Create a closing order. I'll go ahead and spend the $43. That's fine. I'm getting out of this made with 86% profit. Sweet. And let me do that for Amazon. And like I said, you guys should be taking profits as well. I don't know how long this rally is going to last, if at all. It looks like it's already pulling back a little bit here. All right. Again, I'm going to keep my long put at the 85. If Amazon tanks, I can roll that out and sell a put against it, or I can take the profits, straight profits. And again, those are already factored in. 76, that wasn't on my spreadsheet. Is 65. So let's see what 76 looks like. It's still an 84% profit. Fine with that. Anything even remotely close to 90 is phenomenal. So I'm going to spend about 120 bucks to get out of these positions. And there you have it. Take some profits while the profits are there. And then when the market pulls back, go ahead and put on some risk again. That's what I do. It doesn't always work 100% of the time, but I've been pretty successful doing it that way. And that is the video. Happy to be back. Hopefully I get better really soon and get back to my dailies.